Good weekend, all. I'm Epstein, and here we are with your metal market wrap-up, and this is your weekend edition, and this is for Friday, the 4th of October, 2024. Well, the event of the day was clearly what went on, as you know, with the jobs report, and here it is. You can put this on pause if you want. You can read the numbers if you have questions. Suffice to say, it was a blowout to the upside. What I mean by that, you added way more jobs than any of the analysts that I had looked in surveys of, and they list them all, from the different private analysts to banks. Nobody was up at 254 that I saw. Doesn't mean somebody wasn't an outlier. Most of the numbers centered around 140 to 150. The downside was about 70,000. And this comes out, and everybody's going, where did this all come from, including me? Just remember, the Boeing people are not included. They were getting paid in September. They'll show up as they're not working this month. All right, that's where the different parts will come in. Hurricane Helene was in September. It is right now. It's the end. It wasn't included. So all those people out. So there's some bad things going to happen. But are they bad enough to offset these wonderful high numbers that you're getting? And they're wonderful because more people are working. The economy's doing better. So you can't think your position right or wrong. You got to think, what does it mean? My eyes lit up when I saw it, because even though I know gold is down today because the dollar's strong, these are inflationary numbers. I mean, people that are working buy things. They buy, they chase supply. If there's ample supply, it takes supply off the market. If there isn't ample, it drives up the cost of goods. We have more inflation coming for you and me, even though there's core, which doesn't look at the energy and the food costs. But you're much higher in all this. And in fact, on my work in the gasoline, I had a signal that the market's seen the worst of it at this point and can be taking off again with heating oil and some of the other markets. So I'd be paying very close attention to that. And the stock market obviously loved it. So while metals were down from platinum, silver, and copper, and gold rather, copper stayed up. Copper was on my mind there, as it is paying great attention to the Chinese markets, what's going on, and where you go with that. Now, when I look at the gold market, any way you want to cut it, on a monthly basis, so far, we are at an all-time high if you close at 2645.80. For the week, gold was up 0.6 at an all-time high right here. When we look at where the market's at, and those were close onlys. Now when you look at the chart here, this is a weekly chart, and back up and a running. The pattern has been bullish, higher lows, higher highs on the chart. When we take a look at where the market's at, it's well over the key moving averages, and they're lined up bullish with the shortest term, the 18-week over the 100, the 100 over the 200. Got it? So the resistance should be the upper Bollinger Band, and you tell me that you haven't been fighting there. That does not mean that's a top. This is called the Gorilla Glue trade. The market has been hitting it literally every week since back here. And that's a sign of tremendous strength. And it's so well done because you get a close over, then a close under. You're not getting excessive on the way up. Are you embedded? Absolutely. So when you're embedded, it means you've changed the market from being overbought to locking in a bull trend. The correction occurs when and if the red line closes under 79. Didn't occur. When we take a look on a weekly basis, the gold-silver ratio, it took a long time, a real long time, but now you're back under the 18-week. So you got over the market here at the end of June. Stayed over, now it's falling. That means silver is getting stronger than gold, which makes sense. If this economy's on fire, you're going to want silver, copper, iron ore, not only for China, but for the rest of the world, if they can figure out that by cutting interest rates, they can spur on demand in the economy. Now, when you looked at the jobs and broke them down, it's still tremendous service industry. And when you go to manufacturing, what's the one sector out of all the sectors they list that's losing jobs? Manufacturing. But yet, when we go to the industrial, INDU, industrial ETFs, they've been coming up because the market is betting they're going to turn. Well, when I look at silver, you're at the upper Bollinger Band. You've been in sideways action. If this market wants to take off from here, I have been talking, you could be up very quickly before you know it to the $36 area, and so on and so forth. There's nothing bearish I'm seeing on the chart. In the copper market, I get why it stopped. The first challenge of a Bollinger Band. You're overbought, not embedded. That's often it. It's a very different pattern than this one. This is that Gorilla Glue pattern. And here you have the embedded reading. And when I told you, when you close under 79, you then look for your correction. That's there. Take the course that I have on the Enhanced Bollinger Band on the website, iraepstein.com courses. Now, the platinum's fighting in all kinds of moving averages, the 100, the 18-week, and the 200-week. The pattern is still bullish. Higher lows, higher highs, bias up. So if we get a pop in metals, I can again look for the 1035 level in there. In the dollar, let's talk about that. In the dollar, I had been in the bear camp. I used coming to the first challenge of the, right here, of the 200-day average and told my clients off daily charts, even though this is weekly, you got to take your profit. And then I had clients in two types of trades, weekly and daily. All right, and one's longer term, one's shorter. And everything was fine, but you got to be on pins and needles because it's where you normally bounce. If you go through, I was hoping for the 99.5 area. Well, my own greed did me in, I guess, because when we take a look at what the market did, this, you can see how it was coming down there. This is where you were. This is what you did this week. And now you got a reading over 21. So as far as I'm concerned, you can't be short anymore. So you put it all together, you try to come up with a game plan that makes sense. I don't like being wrong the market, but I don't walk on water. And it was a long-term trade, and I told traders on that what the risks were. I said they're much larger. On the day charts, we did great, and that was nice. So how do you put this together? Well, one of the things I use all the time is a formation. And it's called an outside day. You get it all the time on a lot of charts. And it's formed when a market either makes and takes out a prior, like this one here. Here you have a day, you took out the high and the low. Same thing here. You're getting outside days up, outside days down. Is it a sign the trend's going to continue, or is it a reversal, depending on where it comes in on the chart, that you're ending a chart pattern? Very, very important. So I teach you this in 9 video chapters. You see the charting software I'm using here? You're going to get that. You can go back in time so that the videos show you the examples. You can go right to them. And then you also get, while you're taking the course for a couple of weeks, you're going to get access to my full research, including my morning subscriber videos with it. So you see this unfold in real time, not having to go back and pinpoint, and this is how it works. The course will do that, then I'm going to walk you through what's going on. It's inexpensive, folks. Inexpensive. The charting software, if you go out and get it from us alone, is more money than the course. Just the charting software for 30 days. Does that give you an idea? And you get all this that I've just said. Go to iraepstein.com, courses. You can move your cursor up to the top at any point and at least take a look at it. I think you'll be serving yourself well. I'm Ira. I'll see you first thing come Monday morning.